What's up, weirdos? What's going on, guys? All right, so nice little start to our Tuesday. Hopefully, everybody's feeling positive out there. It's a great day to have a great day, guys. Bitcoin climbed. Look at that. Look at that perfect rejection off resistance at 114K. Perfectly touched it. Wicked back down to support at 112,000. And that is what we will be watching for, a close above 112,000. It's funny, this is the fourth green daily candle in a row, and people are still feeling bearish out there. Interesting. Very, very interesting. But Bitcoin has, so far, we got to close above this trend line here, guys. We got to close above 112. We have to recapture the uptrend. That's what we have to do here. So far, we have not done that. We tried yesterday. Unfortunately, we did fall back down below 110,000 for the close, as you can see. So, all right, let's get into it here. Big Kev, what's up, man? Thanks, Rob, for keeping all us newbies grounded and secure in the fact that sometimes the best thing to do is nothing and wait. Are we there yet? Sorry, I had to ask. It's when Moon, when Lambo, brother. Absolutely. All right, kind of a slow stream today. Holy smokes, not many people here today. H. Barbarina in the house. What's going on? Jamie, what's up, man? Good to see you. Good to see you. Ditto says, hey, Rob, hope you're doing well. What are your thoughts on Mammo and yield farming now and during the bear market? Yes, I am a fan of Mammo. I am looking deeper into Mammo, being affiliated with Moonwell the way that they are. I'm very interested. Also just set up a Mammo account, deposit a little Mammo. Nice. There you go. Quentin, what's up, buddy? What do we have here, guys? Make sure you hit the like and subscribe on the way in. Wow, we only have 95 people watching. We have 25 likes. Let's get those likes. We can get to 100, guys. We can get to 100. There she is, Gamma Goddess in the house. Hope everyone's doing well. Seems like the market is turning green. Let's get this money. Amen to that. Beeps. My dude, what's happening, brother? Good to see you over on both channels. Dave, what's up, man? Good to see you, brother. John, blessings, my friend. Super fantastic. Oh, how says that Nadix didn't drop at all. It held up waiting for that pump. Yes, exactly, because it had found itself a nice little bottom, right? A nice little bottom. Nadix has a nice little bottom. I said that. Easy, yo, appreciate all your hard work, Rob. Thank you so much. Gamecast, let's go Dodgers. Must love, Rob, keep the faith. Let's go Blue Jays, brother. Taylor, KTA, nice. Third strike, what is good? What's good? Can we look at KDA and the master bots? Yes, Taylor, the altcoin requests go on the goals tab at the top of the chat. Jesse and James says, let's go Crypto Future family. Let's move October back to Pumptober, and we still have time. Yes, let's switch from Rectober to Uptober, baby. Remember, guys, next week we do have the rate cut coming in, so will we start to price that into the market over the next week? Carrie Ann says, Swift is an amazing opportunity right now. Oh, can I get an amen to that? Absolutely. Ty, what's good, man? Good to see you. Hoover is in the house. Kat, how you doing, Kat? Good to see you. Jared dropping that chatter. He says, about to start stuffing my long-term bags again over in the trading group. Great time with great people. Yes, we've been knocking it out of the park. I dropped a new trade video this morning over in the trading group. I dropped another DCA portfolio video over on the Patreon as well. Guys, check it out. T-Boss says, hey, Rob, what about Jasmy's new news? Yes, I actually have a video coming out about Jasmy's new platform, so you're going to want to check that out as well. That's coming out later today. So you're not going to want to miss it. And I was messaging back and forth with Hara and KJ, just finalizing some details about my visit to Jasmy Labs next month. Hoover says, after the rate cut, it will be Gavember? Govember? Oh, Govember. Gavember? What? What the hell is Gavember? Good times. What do we have? 116 people watching. We are up to 38 likes. Come on, guys. Let's get to 100. We can do it. We can get to 100 likes. We can do it. We're caught up in the chat, so let's dive into the news, guys. By the way, we will be live tonight on YouTube as well at 6 p.m. Central, okay? That is 4.5 hours from now. We will be live again. Make sure you are here for that. All right, let's get into the news, shall we? Okay, so Bitcoin whales quietly embrace BlackRock's ETF following SEC rule change. There's something in my eye here. Large Bitcoin holders who accumulated the cryptocurrencies earlier, commonly known as whales, are increasingly moving their holdings into exchange-traded funds, with asset managers such as BlackRock actively courting them. In an interview with Bloomberg, Robbie Mitchnick, BlackRock's head of digital assets, said the company has already facilitated more than $3 billion worth of conversions into its iShares spot ETF, IBIT. After years of self-custody, many whales are recognizing the convenience of being able to hold their exposure within their existing financial advisor or private bank relationship. This shift allows them to maintain Bitcoin exposure while integrating their wealth into a traditional financial system, enabling easier access and broader investments in lending services. Mitchnick partly attributed this trend to a recent U.S. SEC rule change that permitted in-kind creations and redemptions for crypto ETFs. The adjustment allows authorized participants to exchange ETFs shares directly for Bitcoin rather than cash, making large-scale conversions more efficient and tax-friendly for institutional investors. BlackRock's IBIT has emerged as the most successful among the dozen or so spot Bitcoin ETFs approved in the United States. In June, IBIT became the fastest ETF in history to surpass $70 billion in assets under management, a figure that has since climbed to over $88 billion according to data from Bitbo. Not your keys, not your coins. The trend identified by Mitchnick underscores the growing institutionalization of Bitcoin more than 15 years after Satoshi Nakamoto mined the Genesis block and envisioned a bearer asset built on principles of self-custody. Early Bitcoin advocates have long argued that self-custody is the only foolproof way to safeguard one's funds, a core tenet captured by the mantra, not your keys, not your coins. Yet the rise in spot Bitcoin ETFs and corporate treasury holdings is challenging that ideal, signaling a shift towards more conventional custodial forms of ownership. The irony of Bitcoin maxis screaming that they love Bitcoin because they're anti-institution, yet screaming that they love the fact that institutions and banks are the majority holders now of this decentralized project. The irony in it truly cannot go unnoticed. William, good to see you, buddy. Good to see you, man. While spot Bitcoin ETFs and direct holdings aren't necessarily in competition, each serving different types of investors. Analyst Willie Wu noted that in July, that ETF demand may have siphoned interest away from self-custody. While spot Bitcoin ETFs and direct holding, I already read that part. On-chain data, he said, showed that self-custodied Bitcoin recently broke a 15-year uptrend, marking a potential turning point in investor behavior. So a lot of a lot of whales out there who have held Bitcoin in self-custody for all these years are now shifting towards allowing BlackRock and these spot ETFs to manage and custodian their Bitcoin holdings, which I understand. I've contemplated it myself. In fact, I've talked about it on the channel about how I'm probably going to um, do a little bit of research into the banks here in Canada and what their fees are and stuff in terms of holding onto my Bitcoin as opposed to me holding it in self custody. So that's something I will be investigating in the bear market and talking about here on the channel quite a bit, whether it's worth it or not. Strawberry Dragon dropping that super sticker. Thank you so much, Strawberry. Good to see you. Okay, what else do we have? We got a little bit of an Ethereum update here. The outflows continue. Ethereum outflows surge past 145 million while Bitcoin ETFs drop by $40 million. Bitcoin and Ethereum's ETFs shows mixed performance as BlackRock's IBIT and Ethia lead major daily market outflows. On October 20th, the total daily net inflow recorded a decline of 40.47 million. The cumulative total net inflow reached 61.5 billion, while the total value traded stood at 4.87 billion. The total net assets were reported at 149.66 billion, representing 6.76% of Bitcoin's market capitalization. On the other hand, the Ethereum ETF market recorded a total daily net outflow of 145.68 million. The cumulative total net inflow stood at 14.45 billion, while the total value traded reached 2.15 billion. Total net assets were reported at 26.83 billion, accounting for 5.56% of Ethereum's market cap. The IBIT listed on NASDAQ and sponsored by BlackRock experienced a daily net outflow of 100.65 million. Its cumulative inflow amounted to 64.88 billion with net assets with net assets of 88.82 billion. FBTC from Fidelity recorded a net inflow of 9.67 million. And accumulated 12.55 billion, maintaining 22.82 billion in total assets. GBTC under Grayscale and the New York Stock Exchange remained unchanged in daily inflows, but carried a cumulative outflow of 24.50 billion with 19.21 billion in assets. Grayscale's BTC ETF registered a 7.36 million inflow, rising cumulative inflow to 1.93 billion and holding 5.34 billion in assets. ARK Invest and 21 shares maintain stable flows with cumulative inflows of 2.06 billion and 4.71 billion in total assets. The BITB issued by Bitwise saw 12.05 million daily inflows, increasing cumulative inflows of 2.37 billion. VanEck's HODL ETF registered 21.16 million in inflows, totaling 1.31 billion cumulatively. Wow. BTCO by Invesco added 9.94 million, holding 682.31 million in net assets. Valkyrie's Burr ETF maintained positive cumulative inflows of 318.13 million. Franklin's EZBC ETF accumulated 334.99 million, while Wisdom Tree's BTCW managed 48.92 million. Blah, blah, blah. So, we're seeing a lot of outflows right now in the Ethereum and a little bit in Bitcoin, but I would say overall Bitcoin's ETF inflows are getting very, very bigly on the bigger time frames. Let's go over to Squawk Box. Beebs, what are you talking about? Rob, I happened to catch one of Jake Gordon's videos. He said he was down over 300K on his crypto investments. Not sure if that was because of being over leveraged. I'm not too sure. I haven't watched his video. I'd have to watch it to find out. Kizza, what's up, buddy? What's good, man? You reckon this BTC new range for the time being? No, I don't. I think that if Bitcoin can close above, first of all, we need to close above 110,581. If we can do that, we've reclaimed our uptrend. And then the next goal over the next few days would be to close above 112,000. That's what we're waiting for to continue the uptrend, right? All right, what do we have here? What CNBC's full interview with Agriculture Secretary Brooke Rollins.
U.S. soybean farmers caught in the middle of a trade war with China, with potential aid for the industry being held up by the government shutdown. Join us now with more. Agriculture Secretary Brooke Rollins. Madam Secretary, it's great to have you on. Thanks for joining us.
Good morning. Good to be on.
What do we need to do? Will aid be forthcoming for farmers? And are you optimistic that when the president meets, presumably next week with President Xi, that they could restart? I mean, I know soybeans got a boost when it looked like that meeting was on. Are you expecting a resumption of exports to China for soybean farmers?
Well, yeah, first of all, thank you so much for having me on. I think the president has been very resolute in his constant work to try to find these markets for all of our great goods all around the country. I mean, the trade realignment that began earlier this year, we've now had massive trade wins all across the world, the UK, the EU, Indonesia, the Philippines, Taiwan, Australia, sort of the list goes on. And for the farmers, for agriculture, no one wins more under that scenario than our farmers. Having said that, when you look at China, specific to soybeans and sorghum and a few other row crops are in there too. You know, China, we had a trade deal with them in 2019. The Biden team came in. They did not require abidance to that trade deal of China. In fact, we had no new trade deals under the 4 years of Biden, which is part of the problem, one of the big reasons we're here. But to your point, the president, again, even yesterday in the cabinet room, in the meeting he was having, I think with one of the prime ministers, perhaps from Australia, he was talking about how we've got to get soybeans sold out into the world market. And he feels fairly encouraged that he thinks we can get something done. But I will say the biggest point in all of this is how important it is that we continue to strike these trade deals around the world so that our farmers aren't so reliant on one buyer, especially our soybean farmers and especially with China. So we're working on that too.
But farmers probably do feel like collateral damage because we have so many issues with China. I mean, we could just go down the list with technology and, security and Taiwan and all these things. And China manifested that by cutting off entirely. I mean, I know it was slowing a little bit under the Biden administration, but they were still buying soybeans from us. It went to zero at the beginning of the year. None have been sold, I don't think, in 2025. Do you think that in any negotiations we have with China, will that be something that we insist on to arrive at a deal?
Well, I don't want to get ahead, obviously, ever of President Trump and our amazing negotiators, Secretary Bessent, Ambassador Greer, and Secretary Lutnick. They continue to just work literally around the clock on all of this. I do know that as we're watching the markets, as we understand where different countries are around the world. I mean, for example, Japan in their trade deal committed to buying $8 billion of goods, including soybeans. When I was talking to Italy, they buy many of their soybeans from other countries. And we thought, we need to be talking about buying soybeans from America. But there's no doubt that we are in a bridge point right now, that the president is working to ensure all these markets are open. But as he moves over to Asia in the next few weeks, and as we have those continuing conversations, we are there to support these farmers. And I know you mentioned at the top of the show, and I think on this show a few weeks ago, Secretary Bessent talked about the potential trade aid package to those farmers who've been hurt under the current trade renegotiation. Once the shutdown lifts, once the Democrats, I think we had 10 votes as of yesterday, once the Schumer shutdown ends, then we'll begin to start moving out some of these programs that are so important to our farmers.
This government shutdown is not helping, Madam Secretary. Jamieson Greer pointed out you can't just take the tariff money and just say, okay, here you go. Congress has to allow that. So then the next thing that would be nice to do is to let farmers get these marketing assistance loans, which Senator Thune wants the administration to do that. But you can't do that because the USDA would have to reopen Farm Service Agency offices. which were
Well,
closed.
yeah,
So,
look
so
at
farmers
you.
are just,
You know what you're talking about. No, that's right. The Farm Service Agent, the FSA offices all over the country are closed right now. These farmers, even if they have checks in hand, under some old rule, have to have a USDA signature. We're working to change that moving forward once we get through this as well. But no, it's sort of an unbelievable compromising situation with this government shutdown, not just for our farmers, who of course are our number one constituents at USDA and frankly the backbone of this country, but for the SNAP program, the food stamp program, which of course we administer, for the WIC program, which we administer, just the running of a massive agency. But back to your point, I thought was so good on the farmers and these loans, this aid that's there. At the end of the day, I think, and I always try to say this, these farmers don't want checks from the government. They want to be able to sell their product. And again, this short-term, bridge that we're building to get us to the next phase, all of these trade deals that the president has struck, every one of them really begin to move into effect beginning next year. But why these loans are so important and this aid is so important right now is why these soybeans are sitting, in piles waiting to be sold while we're waiting on China and other markets. They are already planning for our farmers what they're going to do next year, what their planting season is going to look like. They're halfway through harvest right now.
Right.
But in order to be able to do that, to secure the loans needed to plant for next year, they have to make sure that they've got the money coming that will allow them to secure the loans for the next planting season. So that's what we're really focused on. This isn't just about our farmers. This is about national security, being able to feed ourselves and ensuring that we've got the products that are necessary and that these farmers have the support that they need.
can you explain, Madam Secretary, why beef prices have soared and all to get to the point of where we're thinking about importing some beef from Argentina, the same country that's selling all of their soybeans to China? I mean, there's a lot of moving parts, and you're always, you're going to make someone mad when you do something. The president's just trying to lower beef costs, but to soybean farmers, that must be like, you're kidding me. We're going to import beef from Argentina when this is the same country that, and we're helping them out in other ways, obviously, but the farmers seem like the ones that are left out. What about, are we going to do that? Is that feasible, and why? What happened to beef prices? How do we bring them down?
We have had a massive run on beef over the last decade. We've had almost 17% of our producers close, which is about our ranchers, which is about 150,000 ranchers have now stopped ranching. It's a whole other show. We need to describe that. But basically, there's been a massive consolidation, which has not been good for our ranching industry. We have, offshored a lot of that to some companies in Brazil and some other internationally. China owns some other companies. There's a really important realignment that has to happen for us to begin to onshore. When we talk about onshoring and reshoring for manufacturing, we need to onshore and reshore for our beef producers, for our ranchers. So the prices are high. The president is very focused on fulfilling his promise of bringing grocery prices down, but he's also very focused, and you'll hear more from us perhaps in the next day or two, on what we are going to do to incentivize, to open up new lands, to make it easier to become a rancher, to build more processing plants around the country so there aren't just a handful in the middle of the country. We've got a pretty big package coming out. I haven't talked about it publicly. This is the first time, but that'll be coming out very, very soon, again, perhaps this week, and we'll be able to begin to move the onshoring of beef back to America. And of course, as you know, the bigger supply, even aligned with a bigger demand, is going to allow those prices to come down, but also to have a vital industry for these ranchers to be able to survive in, which is what we've got to do.
What about beef from Argentina? Is that a possibility?
Well, the president has mentioned it a couple of times. I think you'll be hearing more about exactly what that looks like. Right now, in America, we consume about 12 million metric tons of beef. 10 million of that we produce here in America, but the 2 million I'm talking about, we've been offshoring. And there's different parts of that, what McDonald's buys in ground beef versus the actual muscle cuts, which is what a lot of Americans, the healthy part of all of this. I mean, here's the other thing that's so exciting for our beef industry is that Bobby Kennedy and my partnership with Making America Healthy Again, a lot of that is going to be moving around the new dietary guidelines around a return to saturated fats and what that means for our protein industry, beef, chicken, et cetera, poultry, pork is really, really, really encouraging. But having said that, we've got to make sure we've got the production to be able to align with that. So yes, the president has said he's in discussions with Argentina. I think we'll be hearing more about that in the next day or two. But as part of that 12 million metric tons, it will not be very much. Argentina is also facing a foot and mouth disease issue, which we at USDA have to ensure that our livestock industry is secure. And I know you've heard a lot about the screwworm coming up from Mexico. Foot and mouth is a challenge too. So we're on it. We're on the front lines. We're going to ensure our livestock industry is protected. But this is a very nuanced, very complex market, but that we're moving in every potential possible direction to make sure we've got a good future for these ranchers.
It's a lot of beef, guys. That's a lot of beef. Let's keep it rolling here. Mario, I'm late. 50 push-ups. Yes, absolutely 50 push-ups. Guys, let's get the likes up. What do we have? We have 199 people here. We have, how many likes do we have? 63. Let's get to 100, guys. We can do it. I believe in you. Over the top, what's going on, man? Good to see you. Kizza, the price of everything's getting higher and higher. Food, petroleum stocks, something's going to give. It's going to be epic. I agree, man. John, blessings, my friend. Can we use Decent Wallet on desktop or just a phone? I've never tried to use it on my desktop. I think you can use it on your desktop. I think so. I don't see why you wouldn't be able to. Famous CEO announces Binance may face a wave of lawsuits following the largest cryptocurrency liquidation in history. The great crash of Friday, October 11th, is still having an impact. As is well known, Bitcoin and altcoins experienced a major crash on October 11th, and the markets witnessed the largest liquidation in crypto history. 10 days after the crash, Wintermute CEO said Binance is facing potential lawsuits over the October 11th liquidations, as debates continue about the causes and aftermath of the crash. Binance took immediate action regarding the problems and losses experienced on the exchange, announcing a $400 million compensation plan. However, according to the CEO, even the compensation announcement won't prevent Binance from facing lawsuits. Quick little side note. Yesterday, I actually was contacted by Binance asking if I would allow them to sponsor the channel. And my answer to that is hell to the no. We're with BTCC. Thank you very much, Binance. At this point, Wintermute CEO Evangy, anyway, said in a podcast that Binance's automatic deleveraging ADL system is clearly malfunctioning. According to the CEO, Binance's infrastructure deficiencies and its unpreparedness for the downturn caused the ADL system to activate at an inopportune time. The ADL involvement only exacerbated the situation, leading to the exchange's massive forced liquidations on October 11th. So essentially, guys, what that means, if you don't understand, is that oracles like Chainlink and Pith are responsible for real-time pricing on crypto and feeds it into these exchanges, right? And pretty much everyone uses Chainlink, right? And because they're like the oracle of the crypto space. And Binance, in their infinite wisdom, decided we don't need to use Chainlink or any other crypto oracle. Let's use an internal system. And it malfunctioned. Not wise. That's why when I say to you guys, oracles like Chainlink and Pith are the glue that hold the crypto space together, I mean it. According to the CEO, Binance's infrastructure, we already read that part. The ADL is essentially an exchange's last line of defense. The ADL mechanism is often never triggered. Many exchanges haven't used it for years. It's designed as a last resort before that exchanges had insurance funds. In extreme cases, such as a massive drop seen on October 11th and the subsequent liquidations, forced liquidations executed through the order books can directly drive prices down to zero. As a price goes to zero, long positions explode. The short traders become the most profitable. Therefore, exchanges attempt to use the ADL to forcibly balance some short positions and prevent a complete price crash. In this case, the ADL automatically closes short positions even if they are in money, creating balance for long positions. So people who had shorts in and were making money, their positions were closed out and they missed out on a ton of profit, right? Imagine having a short in on Bitcoin or something like that on Friday and it crashed like that, having like a 50x short or something like that on it, and then Bitcoin crashed on Friday, but Binance closed your position and you would have made like a fortune. Could you imagine how irate you would be? That's why they're facing lawsuits. The biggest question is how the ADL transaction prices were determined. At this point, it remains unclear what price the ADL was operating at during the crash on October 11th. In my opinion, there were some unfair pricing decisions. He said that Binance suffered serious losses due to its failure to close long positions in time, and that the exchange should have used the insurance fund first to cover the losses, but ADL stepped in directly. At this point, Wintermute CEO said that many companies were forced to close their short positions, and the situation left the companies in a worse situation. On this point, he said, generally, many market-making companies open long positions in the spot market and short positions in the futures market, thus creating a neutral environment. This provides protection against both rises and falls. However, if your short position is closed while the market is falling, you'll suddenly be left with only long positions in the spot market. This means your losses will only increase when the market is already falling. Many market-making companies experienced this in the last crash and lost a lot of money. As a result, we will see some companies take legal action against Binance in the coming days due to the losses they suffered. So don't be surprised to see massive lawsuits being waged against Binance for their market manipulation and their failure to do what was right. Jack Sparrow, what's going on, my friend? Ramona dropping some cheddar, says happy Tuesday. Please hit that like. Yes, guys, hit the like. 204 people watching. We have 73 likes. Guys, let's get to 100. Do me a solid. Let's get to 100. Joe says, hey, Rob, as a crypto veteran, how do you interpret this cycle's end? Some are already calling for the end being 6th of October. No, I don't think that it's over. I'm still holding on to my thesis that Bitcoin will top before the end of this year, somewhere between $150,000 and $200,000, and altcoin season will run into probably mid-February. That's kind of how I see things playing out right now. And that thesis will not change until we get to the end of November and Bitcoin still hasn't topped. Ditto says, hell yeah, brother, Binance can kick rocks. Another local. What's your take on ZBIC and World Mobile Partnership Banking? I actually did a video on that this morning. So go check that out. Troy Rome, Binance needs prison time. Yep. Jake, what's up, man? Are you bullish on XCN? Could not be more bullish on XCN. AF says, come on, guys. Let's get like and subscribe and appreciate Brother Rob. Yes, absolutely. 200 people watching, 74 likes. We're close. 26 more likes, guys. Let's get to 100. Let's get to 100. Do a, it's the HBO special, guys. The hook a brother up. Help a brother out. Come on, let's go. All right, what else do we have? Let's segue over to another article here. Bitcoin surges past $112,000 as the Fed opens doors to crypto. What's next? Bitcoin price prediction, Fed's crypto pivot ignites a bullish breakout. Bitcoin has once again made headlines, surging past the $112,000 mark after the U.S. Federal Reserve revealed plans to explore payment accounts for crypto and fintech firms. This move could give digital asset companies direct access to Fed payment rails. Ripple's been fighting for this for a while, a development analysts are calling one of the most bullish institutional signals of the year. The announcement coincided with Bitcoin's renewed upward momentum, pushing the price as high as 112,413, while overall crypto market capitalization climbed back above 4.6 trillion. Bitcoin actually hit 114,000 before rejecting back down to 111,960 right now. Gamecast, I did that video this morning. So yeah, check that out. Why the Fed's decision is a game changer. The Fed's new proposal would allow licensed fintech and crypto firms to open streamlined accounts with the central bank. That means faster settlements, fewer intermediaries, and more direct connections between the traditional banking system and blockchain-based payments. According to Reuters, the program would remain restricted with no overdrafts or lending privileges, but it marks a clear shift towards integration rather than isolation. This regulatory openness comes after months of heavy scrutiny and signals a more collaborative phase between U.S. regulators and digital asset industries. Following this news, Bitcoin jumped up nearly 5% intraday, breaking above key resistance at 111,500, which we are still above right now. Ethereum also gained momentum, trading around $3,900, while Solana and XRP posted similar yet steady gains. The sentiment across social media and institutional channels turned sharply positive, with traders framing this as the crypto institutional unlock moment where banks, fintechs, and blockchain players could soon operate within the same infrastructure. From the technical standpoint, Bitcoin's breakout above 111,000 to 112,000 confirms a strong bullish reversal pattern after weeks of sideways action. The next resistance sits around 115 to 118,000, while the nearest support lies at 108. I disagree. I think that there is a major resistance level at 114,000. If Bitcoin sustains above this breakout level, it could retest 120,000 before the end of the month, potentially setting up for a new all-time high ahead of the next Fed meeting. The RSI levels remain healthy, indicating room for further upside, and volume inflows have picked up sharply, confirming institutional participation. Beyond the charts, macro conditions also favor crypto. The Fed's softening stance, combined with easing inflation and infrastructure inclusion for digital assets, could mark the start of a new bullish cycle. Analysts argue that if crypto firms gain partial access to the Fed's network, it could boost liquidity, lower transaction costs, and legitimize stablecoin use within the United States economy, all of which reinforce Bitcoin's long-term narrative as digital gold. While Bitcoin's quick rise may trigger short-term profit-taking, the fundamentals are turning increasingly positive. The Fed's move validates crypto's role within the financial system, something the markets has been waiting for since 2021. So if Bitcoin holds above 110,000, the next leg could target 120 to 125 in the short term and 140 to 150 by early 2026, provided macro conditions remain supportive. Very, very bullish. We got another Squawk Box video to get into here. Morgan Stanley CIO Mike Wilson, the Fed needs to cut rates in a more meaningful way.
Yes, right now is Mike Wilson. He is the CIO and Chief U.S. Equity Strategist at Morgan Stanley. And Mike, there have been so many questions about what's happening in the market. Volatility has definitely stepped up, but you've been of this long-term view that we're in pretty good times for quite a while to come. You're still feeling that?
Yeah, I think our differentiated view is what we've talked about, I think the last time I was on the show, is that we believe that we were in a rolling recession for the last 2 or 3 years. The private economy has been quite weak.
Yeah.
I think the Treasury Secretary sort of said the same thing. And now we're in a rolling recovery. The recession itself ended with the Doge layoffs. And if we look at the data closely, and we've documented this, it shows very clearly that there was a spike in layoffs, and there was a a low in all the jobs creation, which the revisions now are proving. And the stock market figured this out. The stock market's smarter than all of us, and the confirmation for us is that the earnings revisions now have really exploded higher in a way they only do in a new economic cycle.
That's what I think is so interesting. David Solomon was here just a little bit ago, and he called this late cycle. You think we're still early cycle?
Well, I think we just transitioned.
Yeah.
Now, where I think I also have been differing is that the cycles aren't going to last that long, right? We're now in an inflationary regime. It's very different than all of our careers where inflation was coming down. And what that means is that these cycles can't be elongated the way that they were because the Fed has to respond ultimately to higher inflation. Think about the last 5 years. 2 years on, 2020, 2021, 1 year off. Had a nice recovery in 23, 24. Then we had another kind of capitulation recession in this year. And now we're into a new 2-year cycle. So you just got to keep that in the back of your mind.
But that's not that different than what he was saying then. What David Solomon was saying, we're late cycle, this could have another year or two to run.
That's right. But I think that context is important to distinguish because if it's late cycle, then you only want to own sort of defensive, high quality names. In an early cycle new recovery, the market will expand. It will broaden out. And that's kind of what's starting to happen now. We think that's the story for 26. It looks a lot like 21 in that regard.
What do you like?
Well, we like a barbell at the moment because we still think the Fed needs to cut rates. So we've been on the cyclical side. We have liked a lot of the tech sector. We have like financials. We have like industrials. That's the pro side on the cyclical side. And then the defensive high quality side, it's basically healthcare right now. We think healthcare looks quite interesting. Now, we do think the Fed will get with the program and they will start cutting rates in a more meaningful way once the labor data confirms what we all know, which is that the labor market's not that good. And when that happens, then we can really transition to the interest rate sensitive parts of the market that have been languishing, things like housing, things like consumer goods, all the durable goods, the areas where there's pent up demand.
How difficult is it to not have government data at this point? Yeah, because you sound so sure in your beliefs on these things.
Well, I think the government data that we're waiting for, everybody's waiting for, is mostly the jobs data, but that's backward looking. I think we've already confirmed that the trough was in April. That doesn't mean, by the way, we're totally out of the woods. But what it means is that I don't think we're going to learn a whole lot from this data that we're not seeing at the moment. I think it gives comfort. I think it will give the Fed the cover to do what I think they need to do, which is cut rates in a more meaningful way. So to me, that's the risk, is that we don't get the data that allows the Fed to cut more meaningfully.
And when you say more meaningfully, you're talking about more than 25 basis points at a clip?
Exactly. Let me just put it in context. So the Fed is behind the curve, in my view, until they get lower than 2-year Treasury yields.
Okay.
Today it's about 75, 85 basis points. So that's just 3 cuts to get to neutral. To get ahead of the curve, they probably got to cut 150 plus. And the only way they're going to do that is if we get weaker labor data, which I think is probably forthcoming, or we get some sort of bond volatility or financial stress, the third mandate, if you will.
All of your thoughts about the market continuing to climb from here, what would happen if we do get some of that bond market turmoil that you're talking about, or tensions continue on this China trade front? Because that's been the macro issue that has made markets wobble recently.
Yeah, so I want to distinguish. Our 12-month view is quite constructive for the reasons I just laid out. But in a short-term basis, this is probably the first time since April that I think we have maybe a tradable correction. And it would be those 3 things you mentioned. First, the China-U.S. trade tensions. We're kind of walking towards this deadline. The markets may get nervous around that. And by the way, it's a correction. It's not like we're going back to where we were in April. But a 10% correction would feel pretty nasty. The second reason would be we get funding market stress, which, by the way, the Chair Powell talked about last week. That's one of the reasons why we may, end QT a little bit earlier next year, because we're starting to see a little bit of funding stress, which is essentially the bank reserves are maybe a little bit too low for the liquidity we need, not just for the financial markets, but now for this economy, which I think it could be booming next year. So those are 2 reasons I think we could see some corrective activity in the near term. I don't think it derails our core view on the rolling recovery.
It's nice you said all of us have spent our entire careers in a low inflation environment. It was nice that you
One exception.
It's nice that you threw me in there. And just to, because it's hard to believe, inflation rate, right when I started in the business, 13.5%. Inflation rate, 13.5%. Unemployment, 9.5%.
Wow.
And what was
9.5%.
like a 30-year mortgage?
Prime rate went to 21.5%. And the 30-year mortgage was 15 or 16. Yeah. No one was ever going to buy another home. And I was lucky enough, we at Merrill Lynch were lucky enough to design a product where you, instead of getting 13.5 tax-free municipals, we did a floating rate thing.
There you go.
Instead of locking that in, we put people in, hey, you don't have to worry. It wasn't going up from 13.5. That was the time, but
30-year zero coupons, what you wanted to buy.
Exactly.
That's what my mom was pitching. When
Because they're not, you couldn't call them. Because
That's right.
yeah, exactly. They weren't callable. Yeah, but when you think about things being bad, think of 13.
Yeah.
I mean,
I can't.
that's like almost speaking of Argentina, that's like a South American type inflation rate.
But I think it's important to distinguish, like, inflation is not bad for stocks, okay, because it creates earnings growth. It's just different.
Yeah.
And if you think,
Painful for everybody
right.
living through it, though.
Well, it's painful for the consumer,
Yeah.
right? And that's why we have this bifurcated economy. But don't fear inflation next year. In fact, if we don't get inflation next year, I'll probably get more bearish, because that means the earnings story is probably not going to deliver on what people are expecting.
You are really contrarian on all these things. We tell people some of the stuff you say, and they go, "That's insane."
That's
Right?
good. That makes me feel better, quite frankly.
Yeah, it does. But yeah, you're right about the earnings revisions. That you're early.
Yeah. And that's a leading indicator. So we know that next year's numbers are going to be quite good. And once again, one of the key risks to that is that we don't get inflation. We don't get the CapEx boom that they're kind of gearing for. That we need that. And then inflation becomes a problem in these cycles when the Fed has to respond. And they're not in that mode right now, right? They're going to let it run hot intentionally. But eventually that probably will come back.
They move the goalposts.
That's right. Well, not until they move the goalposts, until it becomes a constraining factor in the economy.
Exactly.
See, those rate cuts, apparently there is a 77% chance of 3 more rate cuts this year. What do we got? Wise-Tron. Hey, Rob, just wondering if anyone else got stuck on the Brooks Rollins using America too much. Carlitos, Rob, I'm looking to put extra dry powder, but not sure if I should put it where I should put it now, Swift or ZBEC. Well, really, you can't go wrong. Really. I mean, flip a coin, right? They're both fantastic projects. Benjamin, Rob, as alts warm up, will you swing trade? I just dropped the trade video over in our trading group this morning, and I'm dropping probably 2 more trade videos in our trading group this afternoon. So yeah, I'm actively trading right now. Wendy, hey Rob, and Crypto Fam. Oh, what do I choose? More ZBEC or Swift? Can't go wrong. Like I said, love the jacket, bro. Thank you so much, Benjamin. I appreciate you. All right, SharpLink adds 19,000 Ethereum. Total holdings near 860,000. SharpLink has made headlines in the crypto world with a substantial Ethereum acquisition. The company's recent purchase of 19,271 Ethereum, strengthening its position as a major institutional holder of the cryptocurrency. This new addition brings SharpLink's total Ethereum holdings to an impressive 859,853. Such a large purchase highlights growing confidence in Ethereum's future, especially from institutions looking to secure their place in the Web3 and DeFi economy. The timing of SharpLink's purchase suggests strategic planning as Ethereum continues to evolve, especially with developments like Ethereum 2.0 and Layer 2 scalable solutions. Major players are doubling down on their long-term bets. By accumulating close to 860,000 Ethereum, SharpLink is positioning itself as a key stakeholder in Ethereum's ecosystem. This move could be driven by the expected rise in Ethereum's demand due to the growing use of smart contracts, NFTs, and DeFi platforms. SharpLink's growing Ethereum stash is part of the wider trend. Institutional interest in Ethereum is rising sharply, and companies seek exposure to assets beyond Bitcoin. This is also a sign of growing maturity in the crypto market, where digital assets no longer seen just as speculative bets, but as foundational infrastructure for future digital economies. With the current Ethereum market price, SharpLink's holdings are worth billions, making this a powerful vote of confidence in Ethereum's long-term potential. Can I get an amen to that? Let's go back to the Bitcoin charts. What do you have? What do you say? What do you know? So we are above resistance right now. Again, worst case scenario, we need to close above this red line, which is at 110,581. And for a medium case, scenario, we need to close above 112, which we are above right now. And the most bullish case scenario, we need to get back up to 114 here. We rejected off of it this morning, as you can see. We need to get back up there and close above 114. But I will settle for closing above $112,000. Let's continue the uptrend here, guys. I got some coaching calls I got to do over on the Patreon. Check this out, guys. Check this out. Our website is officially up and running. We are good to go. The link is in the description, guys. Go there for your free newsletters, for all of the insights, all of our training courses for Patreon members, our videos, the latest, as we see here, Crypto Future presents Tokyo Truth. Journey into Jasmy. Rob meets Hara-san in Japan, uncovering the story behind Jasmy's mission. And also our newest show on Saturdays, Blockchain Buzz, where we bring together three different voices at random across the crypto space on YouTube. We bring them together every Saturday. Three top voices from the crypto space for an unfiltered roundtable on everything shaping the blockchain world. Every Saturday we have different guests, and make sure you're there, guys. This past Saturday we had Believes Crypto, Rule Black, and Crypto Otaku. Who's going to be this Saturday coming up, guys? You're going to have to stay tuned and subscribe to find out. But also you can check out our truth statements, our newsletters, like I said, what we offer, our memberships, and testimonials from other members, guys. Check all of it out and more. Again, the link to the website is down in the description. Go check it out. So I got to go do some coaching calls, guys. Join our trading group. I dropped one trading video this morning. I'm dropping at least one or two more in our trading group today as well. So check that out, guys. Book your one-on-one coaching calls or join our group coaching calls and so much more. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.